Okay, well, good morning, everyone. Thank you very much for joining us for today's webcast that will focus on how you can maximize your company's PPP loan forgiveness under the Flexibility Act. We've had a great response, a lot of interest for today's webcast with well over 100 people registered for today's event. So thanks again to all of you for getting up early and joining us this morning. My name is Jason Castor, and I'm the Chief Business Development Officer for Parsons, Bailey & Latimer. And we have a great panel assembled today. I want to extend a huge thanks to our panelists for the time and energy that they put into putting this program together for us. Joining me today are Brad Baldwin, President and CEO of First Utah Bank, Matt Neuenschwander, Tax Credits and Incentives Manager from Tanner, and my colleagues, attorneys Matt Cook and Sean Monson, both of whom are members of the firm's PPP audit loan team. Before I turn the time over to the panel, I want to touch on just a couple of quick housekeeping items. Today's webcast is being recorded, and a link to the recording will be circulated later today. All of your lines are muted. However, if you do have questions, please submit them via the chat function, and we will try to address your question if time permits at the end of today's webcast. It's also important to note that today's presentation is a source of general information and should not be construed as banking, legal, or tax advice. If there are questions about the information contained in today's presentation and how it applies to your business, please consult with your banking, legal, and tax professionals. And with that disclaimer out of the way, I'd like to turn the time over to our moderator, Matt Cook, to kick off today's conversation. Matt?
Thank you, Jason. First, I'd like to just start with giving a general overview of this program. Initially, we'll talk about the PPP Flexibility Act and what changes it brought forth. And then we've got some great group of panelists here, and we'll turn it over to them and ask them questions, and hopefully they'll be able to help guide us through the Flexibility Act and some practical considerations that came out of that. Most of you are aware on June 5th, the PPP Flexibility Act was signed into law. The main highlights of the Flexibility Act are that it extended the term of a PPP loan in the event that it's not forgiven from a 2-year term to a 5-year term. It also extended the covered period for forgiveness from 8 weeks to 24 weeks. And it also modified the 75-25 rule, which was that in order to be eligible for full forgiveness, you had to spend 75% of your PPP loan proceeds on payroll costs and 25% on other eligible expenses. The Flexibility Act modified that rule to change it from 75-25 to 60%, 40%, meaning 60% must be spent on payroll costs and 40% on other eligible expenses. It also extended the restoration safe harbor from June 30th to December 31st, meaning that if you had a reduction in wages or a reduction in full-time employees or FTEs, if that's restored by December 31st of this year, you won't be subject to reduction. There's also a new FTE reduction exemptions that if you can show that your FTE reduction was due to being unable to rehire workers or to return to pre-COVID business activities because of a shutdown order or similar legal obstacle to operating your business, you are exempted from certain of the FTE reductions that would reduce forgiveness. So I think we'll start with, and we're fortunate to have Brad Baldwin here with us today, and we'll start with, Brad, can you explain to us just generally what the process will look like for applying for forgiveness under the PPP loan program?
Sure, thanks, Matt. I guess I represent the lender point of view on all this. I assume most people on the call either have a PPP loan or a client with a PPP loan. Let me make a couple of introductory comments. All banks jumped into this thing in early April, and Utah really led the way nationwide in making PPP loans. it's pretty astonishing. We've made several hundred, over $100 million worth. Zions Bank was one of the leaders in the nation, and I think has made over 45,000 of these loans. That sort of comes into play because the forgiveness process may be more difficult than the application process to begin with. These rules keep shifting, and where I think things may change, I'll certainly let you know, but be aware there is still discussion on modifying the forms being used and what the process will be. As a lender, I will say it is our intention to be as lenient and flexible as possible. So when we get into individual issues about documentation or interpretation, at least my point of view is to try to accommodate the borrower. We are not hearing from Congress or the Treasury or any of our banking associations that we're supposed to get money back for Congress. They're not asking us to do that. Also be aware that the money that's been lent so far is the bank's money. So we've made over $100 million in these loans, and we have funded those with our deposit base and other sources of capital that we have. So until the loans are forgiven, which means the SBA remits the money to us, we have fully funded these loans and will be servicing these loans. So that's just a little bit of background. I'm going to talk a little bit about the process, kind of where we are and what we can expect. I think that Matt did a great job summarizing some of the changes in the PPP Flexibility Act, especially the 8-week and 24-week issue. And I know Matt Newishwander and Sean Monson will cover more of the strategy as to which one you should use. As of right now, everybody's payments are being deferred. The deferral period on payments, I believe, was 6 months, but now it's been extended under the Flexibility Act to run from the date the loan was dispersed until the time at which the SBA remits the funds to the lender or makes a final decision on the loan. So rest assured that even though the timeframes are now pretty extreme, and I'll go over those, no payments are due of interest or principal. Where do we see the steps that we're expecting on forgiveness? And again, they may change, but whichever covered period you choose, whether it's the 8-week or the 24 weeks, the forgiveness has to start with an application for forgiveness that is submitted to your lender. Also, and I think we will discuss this, but a huge issue floating around is if you do elect the 24-week period, you can apply for forgiveness early. And there's a lot of issues about what that may mean if you apply for forgiveness prior to the end of your 24-week covered period, if you so elected. We are hoping that most of our customers and most borrowers can use one of two forms that the SBA has put out, called the 3508. Hopefully you've looked at those. There's the 3508 easy form and what I call the 3508 regular form or long form. We anticipate most borrowers to use the easy form. It's available to self-employed individuals with no employees. It's available if you did not reduce salaries or wages during the covered period, at least by more than 25% for any employee. It's eligible if you did not reduce FTE or the average paid hours for your employees since January of 2020. It's available if you can attest that the eligible payments can be verified and documented, and you will be submitting those to the lender. And you must verify the existence of the obligations for payroll, mortgage interest, business rent, and utility payments. So if you can verify all that, and I'm going to point out a word in there that we're going to be looking for, and it says you must be able to verify the existence of these obligations and that they existed prior to February 15th. So if you got your loan in May or as late as June, and you can verify that you paid the payroll, the rent, or mortgage interest, we may still need documents going back to February or January to verify that you had contracted the rent or the mortgage or the utility service prior to February 15th. The other tricky word is when we talk about mortgage interest, it says mortgage interest, which I'm reading and I believe does not include principal on your mortgage payment. So mortgage interest is not your full mortgage payment, and it may be necessary to segregate the principal from the interest for the period of time you're seeking forgiveness. hopefully those that use the 24-week period won't get into the weeds on mortgage interest and rent, utilities, because you'll easily be able to use up the money with payroll, but that'll be discussed a little bit later. So that's what we expect on the EZ form. On the forms themselves, whether you use the EZ or the 3508, be aware that certain matters must be disclosed to the lender. The number of employees you had at the time the loan was made, the number of employees that you have at the time of the forgiveness application, whether or not you had an EIDL loan, excuse me, economic injury disaster loan. A lot of people have an EIDL loan and a PPP loan, and there are ramifications if you've done that, and the forms will ask you if you have an EIDL loan. At the end of the day, I believe the process will be that the SBA, because it's not on the form, the SBA will be making an adjustment to the forgiveness amount if you have an EIDL loan advance, which is the grant portion of the EIDL loan. We can talk about that. Also on the form, you will be disclosing whether you borrowed $2 million or more. So there's been a lot of talk, and Congress and Treasury have sort of indicated they may audit loans over $2 million. There's still a lot of those. It's not clear to me that they will audit all of those, but they certainly have that right, and so they're asking you to disclose that. Those may be categorized separately by them. Let's see what else we got on that. So the 3508 long form, I think we can touch on that, but you'll be using that if you did in fact reduce FTE or salaries or wages during the covered period and you do not qualify for the 1058 EZ form. Okay, that's what. When does this need to be submitted? Answer is under the PPP Flexibility Act now, 10 months after the last day of your covered period. Correct me if I'm wrong, Matt, but it's a long time that you can submit this. Up 10 months after your covered period. So whether it's 8 weeks or 24, you have 10 months. We hope people don't wait that long. We really don't want to drag this out forever because we're sitting on loans of 1% that we have to pay for deposits to fund. So we don't make a lot of money on that portion. So 10 months after your covered period. How will it happen? I will tell you that most lenders, certainly including us and I think any large lender, will be using an online portal system where you'll be able to enter, log in, and the application form will be in digital format on a website. We intend to pre-populate the form, and I hope your lenders pre-populate the form because here I have the 3508. The first 3 questions are going to generate phone calls to the bank. What's your SBA PPP loan number? What's the bank's SBA PPP loan number? What was the exact amount dispersed? What was the disbursement date? So we intend to pre-populate the borrower's name that we have on record and all of that information so you'll be ready to go and fill that out. Whether you upload it to a portal or email it to your bank, you will be sending in the required documents that in the portal that you can save those and work on those, add to those. The bank can be looking at those and talking to you as you go along. We will be setting up what's called a knowledge center, which will have a lot of this information, FAQs, guidance, definitions, things like that will help people work through that. So what do we do then? Now we have this information. We can go back and ask for additional information, or we can agree the application is complete. Under the law, we have to conduct what's called a good faith review of your calculations and the supporting documents. We have the right to request additional information. This is one area we're still waiting on SBA guidance. Let's talk about mortgages or leases. Is it good enough to just get payment coupons or records of ACH payment transactions, or do we need the actual lease or the front and back page of the lease? That's a little bit unclear. Remember, we have to verify the existence of those obligations. So I do recommend that people start gathering that information up, and we'll see what we have to finally submit. And different banks may require different things as part of their good faith review, because that's all it says. It's not directing us on exactly how to go about this. The bank then has 60 days. So look at the time frame. You could be months before you apply, and then we have 60 days to issue a decision. Our policy will be to get those out as soon as possible once we have a complete application. If we do not approve the forgiveness in any amount, we must notify the SBA of our decision, and we must notify the borrower in writing of what we've denied and why. If we do approve the loan, we submit to the SBA an application for reimbursement or remittance. Again, the SBA has not issued what that format would look like, what form they want to use, what web portal they'll be using. So here we sit. I have been advising people to gather information, but don't fill out the form and don't send it to us yet. The forms may still change. I think there's some errors in the forms. There's been a lot of feedback on them. There's a lot of talk out there that if you have less than 150,000 loan, there might even be a more streamlined process. But that hasn't been determined yet. But those discussions are certainly going on. Okay, we submit it to the SBA for reimbursement. They have 90 days. So we have 60, they have 90 more days to approve or decline. Again, I hope they move faster than that, but that's certainly the time that they have. If they approve it, they will remit the money to us. And at that point, we would notify the borrower that we have been paid by the SBA, and that's the end of the loan. Hopefully, and that includes the interest that's accrued and the principal of the loan. So the payment deferral period runs up until that time. So hopefully your clients won't be out any money at all. So that gives you a general idea of what we think will happen and when. Now we can sort of get in the weeds on some of the strategy.
Brad, probably one of the most pressing questions that participants in this webinar have is, do you have any sense of when borrowers will be able to apply for forgiveness, and what does that timeline look like?
The SBA has a pattern of issuing guidance on Friday nights at 10 o'clock. I'm sitting on 6 or 7 final rules, over 40 FAQs. I spoke yesterday with our banking association here. We're a member of what's called the 50 state associations. And I don't expect it for 2 or 3 weeks. I don't know that for sure, but if we're sitting on pins and needles thinking it's coming out by the end of this week, I don't think that's the case. I think they're still wrestling with some of these sort of global issues. Will there be a certified forgiveness for loans under 150? Should we change the form? What are we telling the banks they have to gather? So I don't know, Matt. The answer is nobody knows. Okay, and we've had people call the SBA and Treasury, but I don't think it's soon. I don't think it's days.
Thanks. Another question is, while borrowers are waiting to be able to file their application to forgiveness, are there things that borrowers can be doing now to prepare for that and to try to streamline that process and ensure that they get a quick, as quick and efficient as a decision as possible?
Absolutely. I'd be working through the 3508 and the 3508EZ. They're on the SBA website, and I'd be at least getting my records together on the existence, again, that word shows up, of the payroll, the employee numbers, the 941 payroll tax forms, your lease, your utility bill. I'm not sure the check for utilities is enough. We might need evidence that you have the invoice or the statement, and then evidence that it was paid. So starting back in February, I would be gathering that, maybe even January, so you have those records and you can upload those easily once it's ready to go. I don't think that process is going to change all that much.
Thanks. And then I'm going to put you on the spot here. So as I understand it, if I applied for my loan prior to June 5th, then it ends up I have a portion that's not forgiven of that loan. I understand that I have a 2-year term on that loan. If in the event that I have a 2-year term, what's the likelihood? I think the regs say that borrowers can negotiate with their lender to extend that from a 2-year to a 5-year term. But at a loan at 1%, what's the likelihood that a lender would actually be willing to negotiate a 2-year term to somewhere in between a 2-year and a 5-year term?
There's actually a lot of issues there. One is just getting with, if you're with a huge organization or a fintech company, a financial technology company, one issue is just getting somebody you can negotiate with. If there's a reason to do it, we would certainly extend it. I personally don't want to go 5 years. But we may go 3. I mean, you're right. After June 5, the loan term is 5 years. Before that, it's only extended to 5 or beyond the 2 if the lender agrees to it. But, it just as an individual circumstance, we would not issue a categorical no. And while we're speaking, a pop-up came from the SBA. So when I get a minute, I'll see what they're saying to me.
Thank you. Matt, can you remind us what flavors of expenses or types of expenses are eligible for forgiveness?
Sure, and the Flexibility Act didn't really change any of those, and so I think it just clarified, how much you can claim, especially around payroll, but generally it's still going to be your payroll costs, and so that can include salaries, wages, commissions, PTO time, if you provide some type of an allowance, or, for separation or dismissal, if you had payments to, group health insurance, premiums, retirement contributions, things like that you're matching, payments of state and local taxes. So those would be the type of payroll expenses. Like was mentioned earlier, mortgage interest payments, and so that's going to be just the interest portion, and so you might need to look at your loan amortization schedule in order to bifurcate the interest versus the principal or any type of prepayments. Next, utilities. And so again, like Brad mentioned, those need to be, contracts that are in place as of February 15th of 2020, and it goes through the covered period, whether that's going to be the 8 weeks or the 24. The types of utilities is generally going to be utilities. The types of utilities include electricity, gas, water, telephone, internet access. There is one additional category called transportation, which isn't really well defined. But again, that's kind of what came out through the SBA. And then the last one would be your rent payments. And so if you have a lease, and it includes real and personal property. And so if you rent computers or other equipment in your business, technically, from my understanding, you can include those rent expenses as part of the forgivable amounts.
Great.
Let's see. Yep.
Thank you. Can you tell us a little bit about, if we've learned anything about the PPP program, including the additional changes from the Flexibility Act, is that nothing's ever as simple as it seems. Are there nuances related to forgivable expenses depending on what type of business entity I am? Does it if I'm a partnership or an S corp, if I'm a sole proprietorship, or if I'm just basically a single owner shop?
Right, and I think part of the nuances that came in with the Flexibility Act really relate to the fact that you can use 24 weeks. And so, with that extended time period, I think the SBA wanted the borrowers to focus on the employees versus getting some type of a windfall because they're paying themselves a certain amount. So there's certainly some limitations now on the amounts that you can count as payroll expenses if it relates to, the owner, certain types of payments. And so when we get into, health insurance contributions, so those aren't includable for, if you're an S corporation, for general partners, or if you're self-employed. And so health insurance is one type of expense that you would exclude from your payroll expenses if you were an S corp, a partnership, or self-employed. Additionally, retirement contributions would be one that you exclude if it's a partnership or if you're self-employed, and so you wouldn't include those contributions to a retirement plan as part of the forgivable expenses. I guess the other part that I was kind of getting to is the cap on the amounts paid. And so if you're an owner, employee, or a self-employed individual or a general partner, your kind of max payroll amount that you can include for those type of individuals is, I think, the equivalent of 2.5 months of up to $100,000 per year, or it's capped at your 2019 income. So there's some nuances there. So at most, it's going to be 20,800 or so if you're using the 24-week period. But again, you're also going to have to look at your 29 income or net profit and kind of say, well, what was my income that year? And take the equivalent of prorate that to 2.5 months. And that's going to be kind of the limit for, the owner employees, the self-employed individuals, or the general partners. Again, you don't really have that issue with the 8-week period because they kind of cap that at a certain amount. Again, subject to that $100,000 kind of annual compensation. But I think with the extension to the 24 weeks, they didn't want to have it extend too far beyond that. And so that's why they put in kind of the 2.5-month equivalent. Hopefully the impact of that isn't too significant, since most of the max loan amounts when you applied for the loan was based on 2.5 months of your prior month's salary. So, in theory, you get that 2.5 months for the owner portion of the payroll cost. And then if you have employees, you can kind of spread that out and have a higher maximum that you can hit in terms of payroll costs, so that, if you did have to shut down or furlough for a certain amount of time, you can still use that payroll through the 24 weeks to pay your, average W-2 employees.
And can you explain a quick question that came in from one of the participants in this webinar is, you had mentioned that lease payments are eligible expenses. Is that just real property, or can you also have a personal property lease that would qualify for that, say a copier lease or, equipment?
So the guidance from the SBA is that it's both real and tangible property or personal property. And so if you have computers or a copy machine or something like that you're leasing, that those would be includable expenses.
Great. And then can you explain a little bit the nuances between when do these expenses have to be incurred and when do they have to be paid? Does it have to be only expenses that are sort of accrued during the covered period or paid during the covered period, or how does that all work?
Right. There's always exceptions. The requirement is it's paid and incurred within the covered period. Whether that's 8 or 24 weeks. And so that period generally starts on the day that the loan's dispersed. But, you might be, so it's considered accrued, based on when an employee earns it. And so that's kind of a daily occurrence as they put in hours. And then paid is when, that ACH or that check is made out to them. And so there is an alternative kind of start period for your payroll expenses that you can kind of start it the day after, the first day of the first pay period after the loan's dispersed. And so that way you don't have, if the loan was made or you received your disbursement, the day before payroll, you would have incurred, let's say 13 or, 9 days of payroll. And so because those were incurred before the disbursement date, technically you would exclude those from the covered period. And so that's why there's this alternative period for payroll, and so that it begins kind of the first pay period after the loan's dispersed. And so, that's the idea, that you're paying it and it's incurred. I think the other nuance is that, okay, well, once you get to the end of the cycle, you're going to have things that are incurred, but maybe not paid until the day after your, covered period ends. So as long as those accrued expenses are paid in the next payroll cycle, you can include those as part of the covered period. But the idea is that you're paying and incurring these expenses within the covered period, and that's the expenses that you can include.
Great, thank you. And then are there limits, say I noticed that there's, a limit in the compensation to $100,000. Now, if we extend that out to the 24-week period, do I get 24 over 52 weeks times 100, or is that more limited under the 24-week period?
So for regular employees, that's right. So you can get up to, I'm trying to see if I've got the numbers here. I think it was like $46,100 if you're a regular W-2 employee. And so that's the 24 weeks up to $100,000 of annual salary. And then in addition to that cash salary, you can include additional benefits. So if you've got healthcare, retirement contributions, state employment taxes, those would also go into that. So that increases the amount that you can kind of put into the payroll category of expenses pretty significantly. But you do have, like I mentioned earlier, the limitation related to, if you're a owner-employee or self-employed, an S corporation or a partnership, that you can only go up to basically the equivalent of 2.5 months of a $100,000 salary. And again, it's subject to your 2019 compensation as well. So the lower of $100,000 per year for 2.5 months, or your 2019 salary for 2.5 months.
Okay, and then if I've reduced my number of FTEs or I've reduced wages, how does that impact my forgiveness amount?
So, you're going to be looking at, your kind of a base period where they compare, I think it's January through February 15th, and kind of, what your full-time equivalents were there, and what it is during the covered period. And so if there is a significant reduction, meaning you reduced compensation by at least 25% or more than 25%, or significantly reduced hours in the same ratio, there could be certain reductions where you have to apply, a reduction to your total qualified expenses, basically. You can still get the full forgiveness to the extent that you're paying, your expenses over the 8 weeks or the 24 weeks is still in excess. But to the extent that you've got those reductions in full-time equivalents, and that's kind of where the difference is between the 3508 easy and the 3508 regular is. With the regular, you kind of go through that computation where you say, okay, what were my full-time equivalents before February 15th, and what were they during the covered period? And so if there's a significant decrease, it calculates basically a reduction. Brad, did you have a comment?
Yeah, it may be worth pointing out how you calculate FTE based on a 40-hour week, and what do you do if you have lots of part-time employees?
Yeah, so I think the guidance around full-time equivalent is, I think, 32 hours a week. And so it's calculated, and so you're looking at, okay, what's your average salary? So did you have a reduction in salaries? And then you're more or less from, I guess and if you want to jump in here, feel free, but I understood that you're looking at kind of an hourly, how many hours you're putting in per week, and calculating an average over the covered period, and you're comparing that to a similar average for the January through February time period. And so doing a comparison there of, did you at least have 75% or more of your average hours during the covered period as you had during the, January through February 15th?
Yeah, I thought I read there's a simplified method that, an FTE is 32 or 40 hours a week. I'm not sure. If it's less than that, you could just count that person as a half an FTE and then kind of add those up. There may be a method to do that.
Yeah, and I think the Schedule A kind of walks through that. Again, it's...
Yeah, this is Sean Monson. That's right, Brad. Essentially, when you do the full-time FTE equivalent calculation, you take all the employees that are employed during the covered period, and you essentially determine a ratio. Either assign them a number of 1 if they work 40 hours or more a week, or you assign them a number 0.5 if they work less than 40 hours a week. Or in the alternative, you can either assign them a 0.5, or you can do essentially a fraction where you take the number of hours the average number of hours they actually work, and divide that by 40, and then you can take that ratio. So the alternative is either with full-time employees, they're assigned a number of 1. With part-time employees, they're assigned either 0.5 or the actual ratio when you're doing that FTE equivalent calculation.
Thanks, Sean. And Matt, are there exemptions? So are there specific reasons, for example, if I, for a termination or for a reduction in force that wouldn't count against me when I do these calculations?
That's right. So there are certain full-time equivalent safe harbors where, you tried to give someone back a job after they were furloughed and they decided not to, and you weren't able to rehire someone, equivalent in that role. And so there's kind of an exemption for that reduction amount if that's the case, or if you had people that voluntarily resigned, you're not going to be penalized for that as well. So that's more of, I think, when you get into the form, there's kind of a box to check if, you were unable to operate, as an example, or if you were unable to, rehire those people. And so, again, I think there's some question on how do you document that? What's sufficient? Do you need an email or some type of a confirmation from that person that they've refused to come back? And so I think there is that safe harbor that comes into play, so that you're not being penalized if people aren't, willing to come back and work for whatever reason, that those do exist.
And then, I don't know if this question's answerable, but if I have somebody that leaves during the covered period, and so I've paid them some wages during that covered period or expended payroll costs on that employee, and they leave in the middle of the covered period, is there guidance on how I deal with that situation?
Yeah, I think when you look at the instructions, it'll tell you that you're going to prorate their $100,000 salary for the covered period. Whether that means for the whole covered period, meaning you can get up to, the 15 or the 20,000 or the 45,000. But if they're leaving halfway through, I think the conservative guidance would be to just prorate the 100,000 based on the weeks that they're there. So if they're leaving after 4 weeks, I think that's going to be $7,000 or so of, the cap payroll that you can include as the payroll cost for the loan forgiveness.
Great, thank you, Matt. Sean, can you explain to us kind of the 8 versus the 24-week period, and specifically who's eligible for the 8-week period versus the 24-week period?
Sure. So I think Brad touched on this a little bit at the beginning. If you receive your PPP loan after essentially June 5th or after, you are subject to the 24-week covered period. If you received it before June 5th, then you have the option to go back to the 8-week covered period. And that's the demarcation line is June 5th. And whether you received your loan before June 5th or after June 5th. And actually the regulations talk about whether you received the SBA loan number before that date. And that's kind of the demarcation line between the 8-week covered period and the 24-week covered period. And even if you got the loan before June 5th, you can still select the 24-week covered period, but you have the option to go into the 8-week period. If you received it after June 5th, you don't have the option to go into the 8-week period. You're stuck with the 24-week period.
So seemingly, more is better. Is there any reason why anybody wouldn't just stay with the 24-week period so that they have more time to expend their PPP loan proceeds on eligible expenses? Or is there any reason why you would want to shorten that?
Yeah, and that's a really interesting question. And I consult with a number of employers regarding employment policies and how to manage their workforce. And one of the things that I always tell clients is try to draft policies, try to have agreements or handbooks that give you the maximum amount of flexibility possible. And the one thing that, as I think about that, I apply that principle to the notion of an 8-week covered period or a 24-week covered period and what an employer would want to do. The employer has to really weigh how much am I going to save in potential forgiveness? How much am I going to get in potential forgiveness if I extend this out beyond the 8-week period to, have some more payroll costs so that I can use all of my PPP loan proceeds versus what, flexibility of being able to manage your workforce. Because as long as you are using the PPP loan proceeds, as long as you're under an expanded covered period, you're subject to those restrictions that Matt talked about, and that is you can't reduce wages below 25%. You have to maintain your FTE count, and that's going to obviously impair and impinge on an employer's ability to be able to have flexibility in managing their workforce. So if you've got a situation where you think, that you are going to, your business is cratering and you are not going to be able to have the proceeds and the funds to maintain viability beyond 12 weeks or 11 weeks, and you're going to need to drastically cut your workforce, that's something I think that you need to think about, is whether it's worth choosing the 24-week extended covered period versus just relying on the original 8-week covered period. But again, if you got the loan after June 5th, you don't have an option. This is only applicable to borrowers who receive the loan prior to June 5th.
If I don't opt into the 8-week period, or I receive my loan after June 5th, and I spend all the money before my 24-week period, are there any options to shorten that 24-week period or potentially apply for forgiveness, I guess, early before the expiration of that 24-week period?
Yeah, the regulations contemplate that. They don't really explicitly talk too much about it. The guidance doesn't really specifically address it, but you can see bits and pieces because, for example, if we talked about the wage reduction limitation on forgiveness. So if you've got a situation where you have reduced an employee's wages by, say, 35%, and you apply for forgiveness at week 14 and you're in the 24-week period, you have to take that reduction, and there's a calculation and a formula that you have to go through in the loan application, but you have to apply that reduction in compensation, that 35% reduction, all the way through the 24-week period. And so that's one indication that if you read the regulations, that they contemplate you being able to apply, quote unquote, early, but you're still bound by certain of the rules for the 24-week covered period. Specifically that wage reduction for FTE and for loan forgiveness.
So if I hear you right, I have the ability to apply early, but essentially, am I still bound by the 24-week period? Say if I applied after 15 weeks, what happens if I reduce wages or reduce my force within that, have a reduction of force within that 24-week period? Am I still bound by the 24-week period, or if I apply early, does that shorten it? Say if I apply in 15 weeks, does that shorten my covered period for forgiveness to 15 weeks, or how does that work?
The one thing that I've been able to specifically find in the guidance regards to that wage reduction. Clearly, you're subject to the wage reduction, and I would suspect that you're also subject to the FTE reduction. The interesting thing, and it kind of comes up, raises a practical issue. Let's suppose you file your loan forgiveness application at week 15. You don't have any wage reductions. You've kept your FTE count. You apply at week 15, and then you get, and then at week 16 or 17, you then reduce some of your employees, or you reduce wages. My sense is that you are still going to be subject to the 24-week requirement, but it becomes a practical issue: is how is that going to be monitored, and how is that going to be determined if you're applying for forgiveness at week 14? And to me, it raises practical questions. Is the bank going to come back? Is the SBA going to come back and look at what happened after your loan forgiveness application? They might, and I do think the rules suggest that you are bound by the 24-week covered period rules with regard to FTE counts and to wage reductions. But it's not clear in the regulations other than the wage reduction issue.
And then, Brad, did you have a follow-up to that or anything to add?
I know this is a topic at the SBA. It's being discussed closely because If you go to the 15 weeks, that's twice as long almost as the 8 weeks, which was the original intent. And there's some effort to say you should just be able to get full forgiveness once you've expended the money and you're beyond the 8 weeks. It's my understanding that if you do apply early, there will be some form of attestation that you would sign that you will not reduce FTE or wages for the duration of your covered period or your 24 weeks. I have not seen that form, but I think that also could be coming. And as a practical matter, as you say, on week 20, something unexpected happened. I had to let people go. You know, who's gonna follow up on that? Will there be an attestation at the end of the 24 that you in fact didn't do it? I don't know that, but this is a huge topic.
Great, thanks. Sean, as I understood it, under the 8-week period, there were special rules for employees that were paid $100,000 or more. And essentially in an 8-week period, they were limited to around $15,333 per employee. You couldn't go above that, or any excess couldn't be counted towards payroll costs. Is there a similar rule under the 24-week period?
Yeah, and I think Matt talked a little bit about it. For regular employees, it's capped at $46,000 for the 24-week period, and for owners, it's capped at $20,000. Great.
And then we have a question. Let's say that, you know, we have a company that pays certain of its employees on a commission basis. And as one could expect, you know, if you're comparing 2019 commissions versus, you know, what's the commissions that were paid during 2020, and those commissions would be lower because of, you know, lessened business operations. Is there any exception that would basically, you know, deal with that issue of lower commissions based on just the general economic environment and COVID? Or do you just count what they were actually paid during the covered period in the form of commissions, if that question makes sense?
So let me try and understand your question. The question is, you have an employee who's paid on commissions. You're looking at the forgiveness amount, and you're looking at, okay, these are the commission amounts that we paid the employee for 2020, and they're going to be lower than 2019. And the question is, can you go back and essentially for forgiveness, try to use the 2019 numbers as the 2020 numbers? If that's the question,
I think the issue is does it impact forgiveness? Because technically you've got a reduction in compensation, but it's based on a commission percentage. So the commission percentage didn't change, but because of general economic conditions, the commission amount is less in 2020 than it was in 2019. Does that reduce my forgiveness or potentially impact my forgiveness?
You know, I don't know that there's an exception for commission income. I'd be interested to see. I know Matt looked at this pretty closely. Matt, are you aware of any exception for that? I'm not aware of exception for commission.
Yeah, I'm not aware of any exception either. I think I guess what helps you is maybe over the 24-week period, you'd be able to pay out the majority of those costs. And so, you know, trying to think there would be a comparison of, you know, my full-time equivalents, or did I have a significant reduction in wages? So, I mean, I think you'd be able to hopefully be able to pay that out over the 24 weeks, and by nature of that, get the majority of it forgiven still, even if, you know, your sales are down significantly. That wouldn't be there wouldn't be some detrimental impact because, you know, your sales as a total is down. But I think that's something I'd have to look into a little bit more. I'm not sure.
Okay, but that reduction in commission, that would really only affect forgiveness if it was greater than 25%, because you've got the 25% correct to play with there.
Right.
And then as I understand what you were saying, Matt, what you're saying is, you know, between the 25% sort of safe harbor that, you know, you can reduce somebody by 25% before it counts. And then I guess as a practical matter, I hear you saying that you would just basically, if you've got salaried employees, you would just include those payroll costs as opposed to the reduction from the commission.
Right.
Okay. Then we had another question. You had mentioned that transportation costs were includable as eligible expenses. Is there any guidance around that? Like, for example, if I reimburse mileage to an employee who travels, would that count, or do we have any guidance on what sorts of flavors of transportation costs or what transportation costs mean?
I mean, that sounds like a reasonable assumption. I think when you look at the Federal Register, some of the guidance that's been put out by the SBA, there isn't really a good definition of transportation. I think, where it comes up is it's actually listed under business utility payments. So I think the reading is business utility payments for the distribution of electricity, gas, water, transportation, telephone, or internet access. So I'm not sure if that transportation is more of if you're paying some type of a service charge for utilities, in addition to the cost of using it, you have to pay for the transportation to get it into your business or something like that. And so I don't have a definite answer from Michaela there. That I think the definition of transportation, at least from what the SBA has put out, is it relates more to the distribution of different types of utilities, whether that's, gas or electricity or water, versus, paying someone for their mileage or something like that. I mean, I think to the extent that that's treated as, W-2 wages or some type of compensation or reimbursement, I think that's a reasonable assumption, but it's not really clear from the guidance that I've seen that it would specifically include vehicle mileage reimbursement.
Great, thank you. And I think that's all the questions we have. Do anyone have any practical advice on sort of approaching forgiveness or anything else that they would like to leave our participants with?
One thing that's somewhat interesting, I'm not sure if people want to hear it, is that the expenses related to the forgivable loans, at least right now, based on the guidance that the IRS has put out, are not tax deductible. So if you've got, these payroll expenses or utility costs that you're putting in and those are being forgiven, that you won't be able to deduct those as regular business costs on your, 2020 tax return.
Great. And then from a practical perspective on that, let's say that, basically I apply for forgiveness, but I don't get a decision until after the end of the tax year. I think a lot of people are on a calendar year. So let's say that my determination on forgiveness doesn't come till sometime in 2021. As a practical matter, how would I deal with that when I don't know if I end up with a loan, those payroll costs are deductible? But if I end up with forgiveness, then those payroll costs are not deductible, as I understand you.
Right.
So as a practical matter, how would you handle that issue?
I think generally, if you've calculated the amount that you're going to be forgiven, and most people should be, at the end of their 8 or 24-week period by the end of the year, so they've done that calculation, and Brad can probably speak to this better than me, but it seems like the SBA is being fairly lenient for, forgiving the amount that's being requested. And so it's, I would say, uncommon or unlikely that a lot of those expenses that you submit for forgiveness are going to be denied. And so I think from a practical matter, if you're fairly confident that, those expenses are supportable, you've done the calculation, I would go ahead and exclude those, make the assumption that it's going to be forgiven. That way you don't have to go back and amend. I think to the extent that, you do apply, you make that assumption that, I'm not going to deduct these expenses on my tax return. The bank comes back in January or February or, whenever you file a return. I guess it could be as late as, next October of 2021 that you're filing that return, or September, if you extend that, so, you've got a little bit longer until the end of the year is what I'm saying. You'll have a couple months before the return is actually due. And so, and to the extent that the bank comes back after you filed for whatever reason, if you don't extend, you could, then amend your return to claim those additional expenses that aren't forgiven based on the SBA or the bank review.
Thank you. And then this is a question for all the panelists is, you know, I read it early on that there was a lot of consternation about this issue of not being able to deduct payroll costs if essentially you use PPP loans and the proceeds to pay those payroll costs, and then ultimately those amounts were forgiven. Is there any hope of that rule changing, or any thoughts on whether that would change and Congress would override that and say, okay, even though you have a forgivable loan, you can still take the deduction for payroll?
From what I read on it, I know there were a couple of congressmen that were kind of disagreeing with the assessment that it's not deductible, and so there was some talk about changing that or being more specific. You know, if that legislation, it's very possible. I know there was some discussion that, you know, you're penalizing people or reducing the benefit of this PPP loan because you're making it non-deductible for businesses. But I think we're still waiting for, I don't know, enacted legislation for that to happen.
I don't know, Matt. I mean, we're all just kind of, none of us are in Congress. We're kind of reading the tea leaves. It seems to me that Congress is sick of this program, sick of the criticism of it. I don't know if they want to touch it anymore.
Great. Brad?
A topic came up I read about yesterday. What if you're in your 24-week period and you're running a restaurant or a fitness center or theater and you just throw in the towel and go out of business? Is the loan still forgivable? Is it dischargeable in bankruptcy? In my opinion, I'll just answer my own question. I think it is still forgivable if it was spent on eligible expenses. And if you have unspent money, I think it's probably dischargeable. But I think we may see some examples like that over the coming months. We already have one applicant that's passed away. It's a single member LLC, and she unfortunately passed away. And it's a real issue now how to handle that.
Thank you. Well, thank you, everyone. I'll turn it back over to Jason Castor. I know we're up at our time limit now, so I'll turn it back over to you, Jason.
Great. Thanks a lot, Matt. And thanks again to all of you for joining us for this morning's webcast. We appreciate you spending an hour of your time with us. We recognize that these issues are complex. There's a lot of nuances associated with them. So please consult with your tax advisor, the legal advisor, your banking advisor, as you proceed and navigate through these muddy waters that we're all in. I'd like to extend a huge thanks again to Brad Baldwin from First Utah Bank, to Matt Neuenschwander from Tanner, Sean Monson and Matt Cook, my colleagues from Parsons, Bailey, and Latimer, and again to each and every one of you for joining us this morning. As I mentioned from the outset, the webcast has been recorded. We will circulate a link later today or tomorrow morning at the very latest if you'd like to share it with your colleagues. And with that, I wish you and yours all the very best. Please stay healthy and let us know if there's anything that we can do to help you through these difficult times. Thanks again.
Thank you.
Thanks. Program's still open.